What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at Solana. Now, in recent videos, and in fact in recent months, we've spent a lot of time looking at Bitcoin and we've been looking at Ethereum. And as you can see, the general market right now is rather homogenous in the way that it's acting. So you're not seeing too many coins out there that are going in a different direction than the broader market is going, and we're referring to the crypto market. So today I just want to have a change of pace, and I want to look at Solana because of the fact that I've had a lot of people ask me about this, and I think there's a lot of interest in Solana. And Solana is one of the assets that I do like. It is one that, I know that it's had its issues. With that said, I do really like the network, and I think that once they get some of these bugs worked out, it is going to have an opportunity to really develop into the next market cycle and to continue to grow its user base. So we've seen Solana, perhaps more than most of the other competitors to Ethereum, it has gained a user base and it has individuals using the network, and that's ultimately going to be one of the key metrics anytime that you're analyzing one of these altcoins and trying to determine what its potential is. In a single market cycle, any coin can come out and go on a single big price run, a speculative price run where retail investors who know nothing about crypto are literally just buying a coin that hasn't pumped yet or that they think may pump because someone on YouTube said it will. So you can see when we have these euphoric phases in the market, coins can go on these massive pumps even if they have absolutely zero utility, zero use case. If you don't believe me, simply look back to 2018. These assets that were in the top 100 back then that you very likely not even heard of in this market cycle. These assets went on massive runs at the end of 2017 into 2018 when we hit that classic parabolic peak. And, we saw all these coins that have no utility do that back then. And so that is not a good way in order to analyze what coin you want to be investing in. I've been saying this all the way back since before we hit our market cycle peak. When we do start to head down, you have to be careful with the altcoins because they're going to bleed and they're going to lose more of their value than Bitcoin is. And that has been almost ubiquitous this bear market. So if we just look at where Solana is at right now, so we were up here at around $270, right? And we have actually come down around 90.3% right now. So Ethereum, and we'll go back to the 2018 cycle. When we look and see what did Ethereum do then, and you can see that back then, ETH hit around $1,400 and dropped around 94%, okay? So that sounds, on its face value, that sounds very similar to what Solana has done right now. But notice where the price was here. So we dropped down, we made a low of around $80.90. So that's at 94% drop from the all-time high. Now, where was the price if we looked at an equivalent drop to what Solana has done in this market cycle? So a 90% drop, all right? And this is kind of the thing that I always talk about. If you think that a 90% drop is bad, a 94 or a 95% drop is massively worse. So when we look at the difference here, a drop of around 90% would put you right at around $140. Okay, so that means that the difference between a 90% drop and a 94% drop is huge. It's around 40%. So that means if Solana were to continue dropping from this 90% level that we're at right now, that would put us down here at around right here, right at around $15. This is one thing that I constantly talk about, guys. It's the fact that you have to keep two major things in mind. A is the fact that in these bear markets, the altcoins are simply going to be much more risky than investing in Bitcoin. Because recall, Bitcoin's only down around 74% to its low. All right, 74% to its low. For Ethereum, or for Solana here, 74% would put us at around $70. Okay, so that's a huge difference between being down to $70 and being all the way down to, at its low, around $26. So in that sense, Bitcoin has done exactly what we expected, and it has held more of our value in this bear market as we're dollar cost averaging in, as we're dollar cost averaging into Bitcoin, Ethereum, and to a smaller degree, these altcoins. Because once the market really starts to heat up, that's when we can transfer our funds from Bitcoin, which held its value. We start to get profits in Bitcoin, we start to get profits in Ethereum, and then we can move them into the more speculative assets. Okay, so the last thing we're going to look at is this. This is the volume profile visible range. And if you have watched this channel before, you'll know that we've used this metric numerous times now. This has been a very accurate metric for us to identify where we're likely to encounter areas of support and resistance at. Because essentially what this is showing us is the number of, or the amount of volume traded at any given level. So as you're coming into an area from below, so when we're coming from down to up into an area of high volume where a large quantity of the asset has been traded at in the past, you're going to typically counter resistance at those levels. So, if you were coming from, let's say $20, you'll see there hasn't been a lot of volume traded at $20. So we're looking right in this zone here. If the price was right here and we were coming up into this dark blue zone, that would indicate that there's a lot of volume there and we would likely meet resistance. Let's suppose that you bought at $30 or $40, wherever, and the price dropped down to 20. When you're coming back up and you're hitting into your price level that you purchased at, you're more likely to sell because you have a bearish bias just because the market is extremely bearish. You were just down 50% and now you're back at even. You're happy to get out of that trade at even. And so we see that especially in a bear market, when you come into these high volume zones, when you come from a lower area of volume into a higher area of volume, we tend to see that resistance forms at those levels. And conversely, when you're coming from above to below and you reach into these higher volume zones, these tend to form areas of support. When you come down, if you bought at 20, we went up to 40 and now we're back at 20, well, you're probably just going to sit on the asset because you bought the asset at 20, you were up 100%, you didn't sell. So why would you sell when you get back to your cost basis? You're very likely to hold, and that's what we tend to see. This range right here, from around $48 down to around $26, we have actually been in this zone right here for about 50% of the entire market. So from the time that we were really breaking out in March, we've been in this zone for around 250 days or so. And this zone now in between, this zone up here, we've been in this zone for around 275 days. So in this range, this very narrow range, this $25 range, and remember, we're looking at a log chart here. This is from here up to here, that is around a $200 range. This range that we're looking at right here is only $25. And we have been in this $25 trading range for Solana for around 50% of the time since we really started to break out here in March. Okay. And what we see is there is a large quantity of volume has formed in this zone. So that means that this level is offering us a large area of support. Like we said, we want to know though, where might we head to? Potentially the market looks bearish right now. The Fed may be raising rates 100 basis points, so we have to have a bearish bias. So we'll start by looking below us. What is below us? It seems that we have a fair amount of support right here at around $26. And that makes exact sense. When we come and look here, so we can see this much better on the daily chart. So right at that $26 level, like right around here, we have hit this level right around there. We have come down to this $25, $26 level numerous times now and held it as support. So back here, it was our jump off point when we went from 25 quickly up to 50. We had another correction and we held this level numerous times. So May, then again in June, and then again in July, we got a bit lower and then we took off, right? And then that was our support level when we came back down over here when we crashed in June. Okay, so that would be the next area for us to look if we were to break to the downside. And that is exactly where I would be looking for this market to head to. Now, if we just come back over here, let's assume that the market got real ugly. Where might we see the asset head to? Well, it looks like there's a small amount of resistance at 24, maybe a small amount at 19, but we have a huge amount of resistance right here at around $15, anywhere from $14 up to about $16. And now what's unique and interesting about that level? If we come back and look at Ethereum, how much did we say that Ethereum corrected in this market cycle? It was 94%. Well, when we come look at Solana, what happens if we go down to this area where we have our largest area of support? Okay, so just a huge amount of volume was purchased at this level. We really flew off the launch pad right at this level. If we were to go down to that level, that would put us down 94%, nearly identical to the move that Ethereum made in the last cycle. And so, like we said, that doesn't sound like a lot. Well, hey, we're already down 90%, right? We're down 90%. That's not too bad. Or, well, now we're down 87%. But when you look at it from this perspective, that would be another 53% correction from where we're at right now. So I think there's a lot of symmetry between what we're seeing with Solana right now and kind of what we saw with Ethereum in this last cycle. So, I find this to be very interesting. What I've done here is overlaid Solana on the left and the Ethereum 2016 through 2018 cycle on the right. And what you can see is the patterns appear to be very similar. So you see this large initial run up and then a correction. And if we just take a look at this move, we see this correction around 80%. And what did Ethereum do? Ethereum corrected around 72%. We go on another large run into this second run and then a correction when we come down around 70%. And Ethereum at that time came down around 66%, very similar. And then this was the jump off to the final peak where we hit a peak here. We have another correction. And what do? We correct around right here, 70%. What does Ethereum do? It sees a 74% correction. We go on a 100% rally from that point, and then it's off to the races in the wrong direction. So from this suckers rally that we had at 150, where Ethereum hit it right here at around 800, coming up from around 360, whereas Solana came from around 76. And now you'll see that they both come down into this channel. So we come down right here to 26 for Solana, and we've come down to 167 for Ethereum. And if we just look forward, it consolidated for a bit of time. It even had the upward wedge pattern like we just saw with Solana here. So from there, what happened? We trended sideways. We had one smaller correction, and when we broke below, just to tie it all together here. So what happened? And I'm just laying these right side by side with one another. After we have this small rally, we have a huge correction. The correction sizes are even almost identical. We have a correction. We start to form this wedge. We approach the upper end of the resistance band, and then we crash below. As we're approaching this critical level, exactly like we were back here in 2018 for Ethereum, we are at a very similar point for Solana right now. It's even funny that our massive support level that we have right at this, around $16 level is exactly at the 94% correction from the all-time high that we saw for Ethereum back in 2018. What did that indicate here? Once we dropped below this level, well, look what happened shortly thereafter. We hit this resistance level, right? If we just get rid of this, we hit this long-term resistance level and we come back down one more time. And then that is when we head off to the races, leading us into our next bull market. So I'm not telling you definitively that's what's going to happen here, but I think that this is definitely worth watching. And I think that, there's a lot going on here that's, going to impact the crypto market heavily over the next couple months. And I think it's all about to play out within the next couple of weeks potentially. So I'm not saying that this has to happen like this, but it's at least worth watching. I think I've made a convincing case here that what we're seeing with Ethereum and what we're seeing with Solana, it's at least worth watching. You don't have to run to your account and make a huge trade based on what I'm showing you here. but it's at least worth being cognizant that if we were to see a large crash down here, now you have an idea of where we may see areas of support at. You have an idea of what has happened historically with Ethereum and how this could potentially be related. And you have an idea of kind of where we may expect to see the price head to, which, you know, in a more worst case scenario, I think that down here at around $15 would be a good place to watch for, and certainly could be a price where you consider picking up some of the asset if you've yet to really accumulate any altcoins. So that's going to be it for this one, guys. Until next time, as usual, see ya.